Hello and welcome everybody to our next video, a non-current asset recap. Well, what is your non-current asset? Assets held in the business for more than 12 months time, and the assets that gives you economic benefit, the assets you use in your business for more than 12 months. These can be tangible, this can be intangible, and you record all these into a statement of financial position. You do depreciation on these assets and then get the carrying amount. And yeah, that's it regarding the non-current asset recap from your last chapter. But more importantly, in the entire video, we're going to talk about disposals, sales of your non-current assets. There are three main considerations when we do disposal of non-current asset. Number one, whenever we sell the asset, we either sell at a profit or loss, don't we? Yeah, we get money, cash or bank money, but after selling the asset, it could be a profit or loss. Yeah, and then secondly, we do accounting entries to record the disposal, debit, credit, all these things we do. And third, we can offer the asset in a part exchange against the old asset, the old existing asset, and against the new asset. Basically, you had the old asset, you can exchange it for a new asset. These are the things we do. But let me give you a picturization here. Let's assume we had this is an asset, computer, comp or CPU, computer. Like if we have when you bought it was debit. When we sold we don't have it. You need to assume it's vanished, or let's take the eraser, it's just vanished. You don't have the asset. Yeah? Asset is a debit account, so if it is an asset, when you bought you write on the debit side. When you sold disposed you write on the credit side. We call it disposal. And we open a disposal account. Asset credit, because you got to vanish your asset. You had the asset, let's assume you bought through bank, and you don't have the asset on the other side by writing it. So asset credit, disposal, debit. That's how you do. But little more accounting you got to do, so stay focused throughout this video. It's going to be a little longer video covering the disposal of your non-current asset. Okay, let's talk about the gain or loss of a disposal. Normally you need to follow this formula basically. Yeah, we got to compare the proceed, means how much money we received from the sale of the asset. We call it sale proceed, not just proceed. Sale proceed or bank, money received into your bank. How much money you received? Let's assume we received any figure, £2,000 we received by selling an asset, the computer. The computer, we are selling it. It's a super duper computer. Although it's old, still we sold at a £2,000. Let's carrying amount. Carrying amount means what is the value now? Carrying amount is cost minus provision for depreciation or accumulated depreciation. Let's assume carrying amount of our non-current asset was 1800, like worth of the asset. What is the worth of the asset? The asset maybe cost we bought it for 3000 was the cost, minus 1200 if we do. Yeah, minus 12, you get 1800. Yes, 1200 was this is, I said, cost. This is accumulated depre. So we got 1800. All imaginary figure I'm doing, okay? Is the carrying amount. So carrying amount 1800. But we sold it. We disposed it for 2000. We are happy, isn't it? It's good thing. You're dancing. Wow, super duper good. So that's 200 what? Gain. That it could be other way around. Carrying amount is still 1800. I'm starting with the carrying amount, but we sold it for 1400, disposed it for 1400, and by selling it got some money, but we sold it less than our carrying amount. We're not that happy. We sold less than whatever is the worth of our asset, which is 400, loss. All right, that's how you do your gain or loss on disposal. So you must need to know what is the carrying amount of your item. Also, you should have the information how much you sold it for. Yeah. And how do you know the carrying amount? You need to know the cost, you need to know the accumulated depreciation. Yeah, so stay focused and stay connected with this video. We're gonna work it out soon. A little bit of more theory. They said if your sale proceed is greater than carrying amount, you got a gain. Yeah, greater. Yeah, this is the first scenario in this box is a gain because our sale proceeds was 2,000 and carrying amount was 1,800, so it's a gain. The second scenario is sale proceed is less than the carrying amount, then it's a loss. Look at this, sale proceed less, it's a loss. The second scenario in this box, 400 loss. Sale proceed is 1,400, but carrying amount is 1,800. So sale proceed is less than the carrying amount. That is your loss. This being said in these boxes. Let's check out the accounting treatment. How do you do the double entry? We've got to do 4 steps, people. Yeah. Disposal of non-current assets for cash. 4 steps. Number 1, remove the cost from the asset. I showed you a little earlier with the T account. Yeah. Asset is a debit account. When you bought the asset, you written asset debit and bank credit could be. But now we are disposing it. That's why your asset account going to be credit. Credit. Asset credit. Your disposal account would be debit. That's why, look at this. The double entry here is non-current asset credit and disposal debit. If you meant to do a disposal account, we need to do a disposal account. Disposal debit, you write here asset. Name of the asset or asset. Okay. Disposal is an SPL item and non-current asset is a standby position item. That's your first thing. To remove, you need to credit your asset. Right? Let's go to the next one. It's not just the asset you are removing. Because you're selling the asset, you need to dispose the depreciation as well. You know, the accumulated depreciation. You just need to vanish that asset information, whether the cost figure or accumulated depreciation figure. So the second one is remove the accumulated depreciation charged today. And accumulated depreciation is a credit account. Accumulated depreciation is a credit account. How do you remove it? You need to make it debit. That's why accumulated depreciation debit and disposal credit. You need to open an accumulated depreciation account. Accumulated depreciation. Accumulated depreciation is normally credit. Let's assume you had a balance of accumulated depreciation on the credit side, but because you're disposing it, you're selling it, you need to cancel that figure, and that's why you need to write on the debit side, and the name is disposal. Everything is happening with the disposal account. So in the disposal account, accumulated depreciation accumulated depreciation account is debit. Your disposal account is going to be credit. That's how you do the double entry. Opposite accounts name you write in detail. So look at this. Yeah, I showed you here accumulated depre, normally credit account. We are canceling it. That's why it's debit. Accumulated depreciation account debit, and your disposal account is credit. That's how you do the double entry and T accounts. Next one, third one, accounts for the sale proceed. When you sell, you get money, so your bank should go up, and it is related to disposal as well. So the first one, because you're getting money, whether profit or loss, that's not a matter. Bank debit, your disposal is credit. So we've got to open a little bank account here. Bank account debit and disposal credit. Bank, we call it sale proceed as well. But it is bank money, you're getting money into the bank. So basically it is a sale proceed. Sometimes just known as proceed only. In short, you're getting money. So money debit, disposal credit. We got to take this item into the disposal account at the top here. Go. That is the one. Yeah. Bank debit, we said disposal credit. So let me erase this arrow. Take the pen, and here you write bank or sale proceed. Then you can do the profit or loss on disposal. We're going to do some work on it, so don't worry. It's just the pro forma we're showing it. That's how you do your asset, disposal, accumulated depreciation, and bank account, and the journals in between. Finally is the balancing of the disposal account to determine the gain or loss. Yeah, I have done some figures with, like, 1800, 2000, and 200. This, let me take another color pen, green. This box. Let me show you how did we do the disposal account. Let's assume this is a disposal account. Disposal account. So the first thing we did is disposal debit. The first, to remove the non-current asset, disposal debit, non-current asset credit. So disposal debit, cost of the asset. Cost of the asset, I said 3,000. Yeah, 3,000. Disposal debit, an asset account credit. Like if you meant to do an asset, that is credit 3,000. Right, disposal. Yeah. But asset is none of our concern for the timing. I want to show you how much is the profit or loss. The profit was 200. We're going to prove it. Disposal debit, asset credit. Second one, to remove the accumulated depreciation. Accumulated depreciation is 1,200 for our purpose here. So accumulated depreciation is a credit account here. We've got to make it debit. Accumulated depreciation, debit, disposal, credit. So into the disposal account, you write on the credit side 1,200. We call it accumulated depre. You can open an accumulated depre account, and that is 1,200 on the debit side. You write disposal into the detail. Yeah. Yet again, we ain't going to do accumulated depreciation. We're just talking about the disposal. Third one is the money we're receiving. Bank debit, disposal credit, because your bank going up debit and disposal is SPL credit. So into the disposal account is credit. We do have a bank account already, or if you want me to open a bank for you, I can do it. Like bank debit, the green is how much? 2,000. Sorry, 2,000 money we received, and one more zero. And disposal credit, 2,000. We call it bank, or we call it proceed. And that's it. We got to do balancing. Total. Which side is bigger? Your debit side is bigger, isn't it? Yeah, £3,000. On the other side, 3,000 is a pound sign. Yeah. On the other side, you write 3,000. From this 3,000, if you take away 1,200 and 2,000, let me take the calculator on the screen. 3,000 minus 1,200 minus 2,000. No, it's the 3,000, because it's a profit, is 3,200. Yeah, it was my bad. I need to take the eraser. Yeah, let's take the eraser, and yeah, hold on 1 minute. It's a bank. This 2 makes bigger, 3,200. 3,200. Take here your asset, 200 is left. That goes to SPL. Transfer to SPL, or statement of profit and loss, or P&L. Disposal debit, but SPL account credit. SPL account credit by 200. That's how you know it's a gain or profit, you call it. If it is a loss, it would have been on the credit side of your disposal account. That's how you do. So you must calculate both sides. Yeah, I thought that the debit side was higher. No, credit side is higher, 3,200. That's how you found the profit on disposal. You can do the loss on disposal. You know, this picture, we can do this way, the same way. We just need to open a disposal account. If we have any space, we can do. Let me use this little space here. Disposal. So asset was still 3,000. Accumulated depre was still 1,200, wasn't it? Yeah, 1,200. But this time bank is 1,400. Yeah, bank is 1,400. So now tell me which side is bigger. Debit side is bigger. Yeah, because it's a loss, 3,000. From this 3,000, we got to take it. Let me take my calculator out on the screen. 3,000 minus 1,200 minus 1,400. You get 400, and that's a loss. Still SPL, but it's a loss on disposal. I hope that makes sense. Now we're going to check out some activities, and there is activity 1 in front of you. Disposal of machine for cash. A business bought a machine for 6,000. So that's the cost of the asset, and held in the business for 2 years. The machine is sold in year 3 for 3,000. That's your sale proceed, bank. Sale proceed of bank. The business depreciates the machine on a diminishing balance at 40%. That's important to note down. No depreciation is charged in the year of disposal. So although they are selling it year 3, you will not charge any depreciation. So you're going to charge year 1 and year 2 depreciation at 40% reducing balance. Okay. There is one more line. The business has the policy to capitalize non-current asset expenditure over 500. Okay, maybe needed, maybe not needed. We don't know yet. Let's check out the requirement. Number A, calculate the gain or loss on disposal of the machine. Please tick in the relevant box to denote whether the amount is a gain or loss. Yeah, we know what to do. Yeah. So A, let's work it out. We got to do a little bit of working, so even a bit of space given. So how do you know the gain or loss? We know the formula. We got to find the proceed, sale proceed basically, isn't it? Or bank amount, which you already know is 3,000, and you compare with carrying amount. Carrying amount we don't know yet. It's a question mark. And how do you know carrying amount? When you check it out, then you can find either profit or loss, don't you? So we've got to do it, but let's find out the carrying amount. How do you find the carrying amount? Cost minus accumulated depre. Now the cost is given 6,000, doesn't it? Let's check it out one more time. I remember. Yeah, it's 6,000 at the top. But how is the accumulated depre? Is it given? Not yet. Or like information given, not the exact answer. So at 40% they said. So 40, let's check it out. 40 or what? Yeah, 40% diminishing method. 6,000 times by, if I do, let me do it here, 40%, year 1, let's assume this is year 1. We got to do second years, yeah, up to 2 years depreciation. So 6,000 times by 40, you get 2,400 is the depreciation. 2,400 is the depreciation. We got to take it away from 6,000 to get the carrying amount for year 1. So how much is that? 6,000 minus 2,400 is 3,600. Yeah, 3,600. That's the balance CD for year 1, but for year 2, that is your balance BD. And again, you do 40% because it's reducing balance or diminishing balance to get your depreciation. That is the depre, yeah, depre charge. And this 3,600 is carrying amount, CA. 40% when you do, we're going to get depre for year 2, depreciation. Let's take our calculator on screen. Times by 40%, you get 1440, 1440, which should be taken away from 3,600 to get the carrying amount for year 2. So let's take a calculator on screen. 3,600 minus 1440, 2160. 2160 is the carrying amount at the end of year 2. So 2160 I got to write in the carrying amount box. We know the carrying amount now, so let's remove the question mark. Aha, we sold at a higher price greater than the carrying amount. That means it's happy face. We are happy and it's a profit. 3,000 we received, but the worth of the asset is 2160, so we sold at 840 higher. It's a gain. So you tick here, 840 is your answer. Number B, requirement, and here we got to do the T accounts, yeah, which I have showed you in at the beginning of this video. So this is your asset account. We already have some asset which is debit, but because you're disposing the asset, you need to make it credit. 6,000 becomes credit, and you write inside the detail disposal. You need to choose it here. There's a pick list given at the bottom. That's your disposal being taken. Yeah, that's first. So your asset is removed. The first T account is to remove asset. Second one, this is first. Second one, to remove what? Accumulated debris. To to remove accumulated depreciation. Now accumulated depreciation is a credit account, so already on the balance BD on the credit side is 3840. We need to remove it. Yeah, let me show you even how do you get the 3840. The first 2 years depreciation. Let me check the color of the pen. The first year depreciation is 2400 charge. Second year depreciation is 14440. 2400 plus 1440. It should be that figure. Let's take the calculator on screen. 2400 plus 1440, you get 3840. That's your depreciation. That's accumulated depreciation, but because you're disposing the asset, the depreciation should go down as well. 3840, and you write disposal. Okay, now it's a disposal account. In this disposal account, we got to find out whether profit or loss. So asset credit, disposal, debit, yeah, 6,000, and you write machine at cost, or you choose this this one, machine at cost. Yeah. Then second one is accumulated depreciation was debited into the accumulated depreciation, but in disposal account it's going to go on to the opposite side. 3840, you write opposite accounts named machine accumulated depreciation. And you know the bank money received, how much money received? 3,000, I remember. What is that? Yeah, that's the one here, sale proceed, or in the question it is given, that's the 3,000 you received. So bank debit, disposal credit, so into the disposal account is credit side 3,000, and inside you write bank. Then let me erase the arrow, this arrow. Oh, okay, I'm taking the pen one more time. Okay, now I got to do the profit or loss. I need to check which side is bigger. It looks like the credit side is bigger because it's 3,840, so it's 6,840. 6,840. Take away 6,840 is a profit. Yeah, and you choose profit and loss, P&L, and that's your T account. The 840 we got here, we have proved through a T account of disposal number 3, and that's how all of you do. So in our next video we're going to talk about part exchange allowance. That is also going to be a long video, so stay motivated and focused, and see you in the next video. Goodbye.